Hi, this is Jessica Morrison, Realtor with Century21 Sheets, based out of Indianapolis, Indiana, serving your global real estate needs. We are back today with Angie Turley and Fairway Mortgage to talk about the 2023 spring market update. Angie, it's so nice to meet you.
Nice to meet you too. Thanks for having me on today.
You're welcome. So Angie and I got connected through Josh Hargis, who just won a major community service award.
Yep. So it was the MyBor Affiliate of the Year.
Yes.
Yep.
Yes.
So it was pretty awesome because, we have over 1,500 affiliates in Central Indiana. So it was awesome to see him win that.
Yeah. And even if he won the community service award, he just does so much for our industry. So
it's insane. He's a rock star. That's for sure. I'm very lucky to have him.
Yeah. Well, our audience today, there's a lot of different mortgage companies out there, as you can imagine, Angie, but help us get to know who you are and who Fairway is.
Sure. So you will see my lovely red Friday attire today. So one of the things that we love about Fairway is every Friday we wear red, and that is to remember every defender or remember everyone deployed. So we do a lot with veterans and service dogs. We have a nonprofit channel called American Warrior Initiative. And with the AWI channel, we were able to give away 101 service dogs across the country last year to veterans. And Fairway actually vets all of that. They pay for the dog, they pay for all of the training, if you will, and then gives them, some dog food and other stuff. And what's really cool is when we do these service dog giveaways, these veterans that come in have no idea that they're going to get a service dog. They think they're just coming to talk about being a veteran. So we bring them up on stage, and then here comes the dog, and then here comes their family, and it's waterworks, and it's like, oh my gosh, how cool is that? Because our CEO is awesome about saying loans are what we do, not who we are. So we love to give back to the community, and that is one huge way that Fairway and our team gives back to the community, is wearing red every Friday and just making everybody remember that, our country is free because of those who serve.
I love that. Guys, when we scheduled this interview, I had no idea that was a thing. So I'm glad that worked out. And that's probably the best introduction I've ever heard.
Well, thank you.
Great job.
Thank you.
And the quote, loans are what we do, not who we are. I think you could say that for any profession, but I love the humanizing element with that. So,
and really that's from the top. That's from our CEO. I mean, that's down to 8,000 employees, and he is very much a people person, and he knows that, a loan is not a number. A loan is a person, and it's a family behind it. And he just wants to make sure that everybody is taken care of, and that they know that we do this to make money, but we also do it to take care of people. And he wants to make sure that we are always reiterating that.
That's great. Mm-hmm. So Angie, how did you, let's say that we've got people who are considering purchasing a home this spring, they're interviewing loan officers. Maybe can you speak into things that they should look for when interviewing a loan officer, and how maybe your expertise might be different from someone else, even here in Indianapolis?
Sure. So this summer will be my 30th year in the business. I started in 1993 at a real estate office making $3.25 an hour. So been around a long time. That was before we had computer systems. We typed everything on the typewriter. And I have also, just throughout my career, processed, underwrote, closed, was an assistant to loan officers, have my real estate license, was an assistant to realtors. So I've really done everything but title and homeowners insurance, and I'm not going down those roads, so I'm stuck here. But really, you just want to make sure that they're providing the correct and proper loan program for you. And my adage again is loans are what we do, not who we are. And if we have a loan program that isn't the best suit for maybe a client, I have a lot of connections in the business that we will send them on to another person. Josh Hargis and I were out making sales calls the other day, and we were in his vehicle, and I was talking to a client who is a pretty known person in Hendricks County. And I just said, hey, we're not the right fit for you for what you want to do. So here's my friend at a local bank, and they're going to be able to help you better. And he called me the next week and was ecstatic with the referral we gave him, but also he has referred us people since, because we are in this again to make money, but to make sure that it's the right fit for the client. So you also want to have somebody who's well-rounded and not just looking to make their next sale, but I'm always looking at making customers for life. My whole program is based on referrals. And so I want to make sure we get you in the door. So everybody has, if you will, programs, but you also have to make sure it's the right fit for you.
100%. You are killing it.
Just speaking the truth. I mean, that's why Josh and I mesh so well as far as that goes with everything that we do.
No, and it's 100% my way of doing business as well. Like, I live and breathe by referrals, and it's been really fun to see over the last 2.5, maybe almost 3 years now, doing this interview series where, but whether it's social media or however, people find the content, you end up, especially through referrals, attracting more people that either are like you or just you jive well. And when I first got in this business, I was having to do cold calls and answer Zillow leads, and I got cussed out and depressed real fast.
Those are not fun.
No. Not fun at all. And I'm not knocking anybody else's business model, but it is just really refreshing when you can build your business through referrals, because it's also got that accountability built in. So what a great testimonial.
Thank you. Well, like I said, we can talk about loan programs till we're blue in the face, but really you want to have somebody that is an advocate for you and that has your back and that is an advocate for you as a realtor, because at the end of the day, if you're referring me and if I'm, excuse my language, an asshole, like that's not going to go well for you. Right. So we have to make sure that our relationship meshes well too, and that I'm representing you to the best of my ability as well.
Yep. I had a loan officer a number of years ago who basically got fired from my list because they felt it was okay to talk down to females. And it's like, nope.
No, and not everybody's going to want to work with us, and not, and that's okay. I mean, there are people that will call me and say, I love you, but this couple refers a male loan officer. Okay, well, there's nothing I can do about that because I'm not magically going to grow something for you. So
yep, no, there's more than all sorts of different ways to do business, and there's lots of different types of people. So this is one flavor out of many you all can choose from. But I don't want to assume that the person watching this is familiar with Fairway Mortgage or the loan programs that you offer. Basic question: what makes a mortgage company different than a bank?
Okay, so there's actually 3 channels of that, if you don't mind if I go down all 3.
Yep.
So we at Fairway are a mortgage lender. And so basically what that means is a mortgage lender, we directly process, underwrite, close, and fund in our name, meaning that the processors, the underwriters, and the closers all are Fairway employees. So I can pick up the phone on a Friday night at 6 o'clock and say, hey, underwriter, I need help on this file. They are, my coworker. So they will pick up the phone, talk to us, go through things with us. The only thing a mortgage lender normally doesn't do is service the loan, basically meaning who you write your check to. So I did my refinance with Fairway. It was probably 2 or 3 years ago. They sold my loan to one of our servicers. I had a problem with my escrow account. And instead of going to that lender that I don't know, I just went back to our servicing team, and it's a 911 servicing email, and said, hey, servicing department, I need help on this, my particular file. My escrows are messed up. Well, they went to that servicer on my behalf, fixed my escrows, and got it handled. So just because we sell the servicing of the loan doesn't necessarily mean we can't still be involved for the entire life of their loan. Now with a mortgage banker, the mortgage banker, and again, depending on the bank, because there's so many banks out there, there's smaller banks that are credit unions, and there's the larger banks such as a Chase or a Wells Fargo, and they all work differently. But with the larger banks, and sometimes even the smaller banks, they have a smaller center, meaning for their operations. So an underwriter may live in the state of Texas and be underwriting your file in Indiana. And Indiana and Texas lending guidelines are 2 totally different things, just like you wouldn't want an appraiser from Texas coming to appraise your house in Indiana, just different areas. So with a bank, you're not always going to have people that are local that are working on your files. So that would be the only thing I would caution with a bank. As well as a bank, there's a lot of overturn with employees. As you know, with us here, we try to keep everybody on the same team. So like my team, we have our own processors, and then we have our favorite underwriters that we send our files to. And then with a mortgage broker, a broker is somebody that takes your file, takes your application, but then has to basically sell you, if you will. So they will go to Wells Fargo, they will go to Chase, they will go to a multitude of companies and figure out what is the right home for your loan. And then when they pick that home, they have to go to those underwriters, those processors, those closers. So they don't necessarily have control of your file. It's wherever they found your home for your loan at. They are basically just a matchmaker, if you will, that is matching you up with that lender. So they have an account representative that will be their person that they talk to if they have a problem. So with the differences, the biggest thing is we have more control over your file. If I don't agree with an underwriter, I can go to an underwriting manager and say, hey, I don't agree with this condition and here's why. And I may be able to get that condition overturned. With a bank or a broker, you may not have as much control as far as that goes. So that is part of the reason that I've always worked for a lender and always will, is just because we have more control over the file.
To clarify, you would be classified as a mortgage lender?
Correct.
Or,
yep.
Okay. It's not the first time I've heard that broken down. I just never want to assume that the person watching this is as up to speed as you and I might be. So,
right. Correct.
And I think it's good to have a refresher. I was once told that banks have a loophole where they don't have to hire licensed mortgage loan officers. Is that true?
That is correct. So it's called the NMLS is what we all have to have. So it's the National Mortgage Licensing System. And anyone who wants to look up an NMLS number can. And if you just Google NMLS Consumer Access, you can actually see the job history of a loan officer. If they work at a bank or a broker or whatever the case may be, they still have to have the number, the NMLS number. But if you work under an FDIC insured bank, you do not have to pass a state or national licensing test. You only have to have the NMLS number, which means that those bank loan officers might not necessarily know as much as we do or are up to the standards, because we have to, as licensed lenders, go through continuing education every year for at least 8 hours. And then I'm licensed in 26 different states. So for every state, I have to do another hour of continuing education that's specific to that state. And if you work for a bank, you do not have to go through that.
So the burning question, I think, for my audience is going to be two. First, how is it legal for a bank to have an underwriter be working on a file if they're in a different state? And how is what we just talked about, do you have any clarity on how that's able to be legal or allowed?
I don't even know if there's a legal term for it, if you will. It's just if there is a nationally chartered mortgage company or bank, they're just their employees. So it really is dependent on each lender and each bank. So with Indiana, we're part of the Midwest region, if you will, for Fairway. So we have underwriters that only underwrite for a region that are knowledgeable about our state. Like 2 of the 3 of our underwriters that write for our state live in Indiana, but one lives in Michigan, but she's not in, again, Texas or New York or California, where the laws are vastly different. So I can't really answer the question of why they're allowed to do it. They're supposed to be up to date on the state licensing laws, but we know how that goes. I mean, not everybody's up to date on what they should be. I mean, people let their driver's license lapse.
Yeah, no, and that's fair. And I don't mean to put you on the spot for something super technical. I just get nerdy about stuff like that because I think the more we can understand how something works when there's maybe bumps that happen, not necessarily saying for our transaction, but maybe even just understanding events that happen in our economy, we have a better level of empathy to engage with that rather than, I think, ignorance propelling like conspiracy theories or something that's just not founded. So I don't think that was I don't know if that was really helpful for you all as an audience, but I think it's just a good reason to screen your people accordingly. And are there questions that you would encourage people to ask when interviewing a loan officer?
For sure. I mean, you definitely want to know their experience. And if they're, I mean, we were all brand new to the business at one time, but if they're not experienced, like what kind of experience do they have behind them? Maybe because you want to make sure that you do have somebody with some sort of experience in case there are bumps that come up in the road. You always want to ask about closing costs and interest rates, because closing costs and interest rates do vary from lender to bank to broker to other lenders to other banks to other brokers. So that's always a good question as well. But you also want to make sure you're comparing apples to apples. You can't take my rate as a mortgage lender versus a bank, because a bank is 9 times out of 10 going to have a lower interest rate than we do, because their bank loan officers are bank employees. They make a salary. We work on 100% commission. So the bank can control what their interest rates look like. So those would definitely be questions I would ask. And then really, what kind of programs do you offer? And maybe not just the basic FHA, VA, which is for veterans, USDA, which is for a rural area, or a conventional, but what outside of those basic loan programs that most lenders have, does that mortgage person have that might not be with another lender? Because just for instance, we have, I believe, 7 down payment assistance programs right now, and they're all through different channels. And we have one I know for sure that not a lot of lenders do. And so that is one thing that we will sell over another. We don't do land loans, for instance, but I have a bank that does land loans. So if you're looking for a land loan, again, you just really need to be educated on those loan programs and who has what.
That makes a lot of sense. And thank you for clarifying.
Sure.
Can you speak into interest rates? And I think this is also a good segue into the next 6 months, but I think a lot of times people get tunnel visioned on interest rates, or, when they're shopping lenders, that's the first thing that they look at outside of closing costs. And some of that is true. We want to make sure that our payment is competitive and that we're not overpaying for a mortgage, but maybe can you give a bigger picture view of things to take into consideration? Because, on some level you do pay for what you get, with, I don't want to go down a tangent, but I think you understand where my question's going.
Sure. So as far as interest rate goes, a lot of the times we're telling borrowers now is marry the house and date the rate, because if this is your forever home, rates are not going to be this high. And historically, honestly, our interest rates are still really low. If you look at 15 years ago compared to what we have now, interest rates are low. And you can look at a 30-year chart and we're still low on that chart. It's just everybody has been so used to seeing interest rates in the 2s and the 3s for the last few years. That's not going to happen for the next probably 5, 6, 7, 8, 9 years. Who knows what's going to happen with the economy? But if this is a house that you love, there are options. We have a buy down of an interest rate we can look at. We also have what's called a 2-1 buy down, where your interest rate is lower for the first year by 2 points. Then for the second year, it's lower by 1. And then the remaining 28 years, it is that fixed rate that we started with up front. And we're hoping that if we sell the 2-1 buy down within those 2 years, the interest rates will be down low enough that it will make sense for you to refinance. And then, there's also adjustable rate mortgages we can look at. And there's just, again, a lot of factors that go into that, but there are options to make it to where it's comfortable and feasible for you to have a good interest rate.
That makes sense. So for the next 6 months, we've got a 2-1 buy down program that's available and lots of diverse options with Fairway's mortgage portfolio. How do you see, or what are the conversations that you're having that would really encourage buyers to navigate the market correctly in the next 6 months? And maybe what are some common questions that you're having to answer or field?
Sure. So the next 6 months is going to be a little tricky depending on where we end up with inflation and all the things. In the last 6 weeks, we've seen interest rates trend down, and then some job reports and market reports came out this week, and now we're back at the rates we were at in November this week. So they're always going to fluctuate. nobody has a crystal ball, but from everything that we've seen and every financial advisor that we listen to on a national level says in the next 6 months, this market is going to stabilize out and the interest rates will start to go down. Now, with that, now is almost the time to buy because the competition is low. We don't see a lot of the multiple offers that we were seeing a year ago. I mean, a year ago, I know, there was 20 offers on a house. You were paying $20,000 to $100,000 above the asking price. You were draining out your 401k to make up an appraisal gap. There was just all kinds of crazy stuff going on. But right now, buyers really have a competitive edge because there's not as many multiple offers. Inspections are back if you choose to do so, and you're able to negotiate that stuff, whereas a year ago you weren't able to. So I think if you get in now, you're going to be able to not have as much pressure as you did a year ago being a buyer, and you're going to see, I believe, more inventory come on the market to help those buyers.
Lord would hope so.
Right.
I don't know. I don't disagree with what you're saying. I feel like it's more competitive than, I'm like, on some level, maybe my clients have been picking really good houses, but I ran into a multiple offer situation on a for sale by owner. Like,
oh wow.
I had one offer on the table last night, and within like 5 hours, it went from one offer to we were against 3, and my people didn't get it. They wrote a strong offer. It was not, I would say, how I would describe my COVID competitive offers, but it was still strong. And that winning offer had waived the inspection and had appraisal gap guarantee language. So I don't know. I think on some level it comes down to the house, because you have listings that are sitting, and for those watching, a strategy could be that you go after the more higher days on market opportunities to get a good deal, which on some level was what we tried to do, I think, for the last couple of years, to especially for those first-time home buyers, to make things more accessible. But yeah, I feel like it's almost just really house dependent. Like, you can have some listings that just sit and don't get a ton of traffic. And then really nerding out here. So for those not familiar, we recently switched software, or like our multiple listing service. Technically in Indianapolis, we're what's called a broker listing cooperative, where we had an issue a number of years ago that people were wanting to access our information, but they weren't paying to be a part of it. So instead of a service, we changed legally to a cooperative. And we changed software, and our area had about 35 days to get used to the new technology. And it's been a learning curve. And on some level, I think, change is hard in general for a lot of people, but I think I'm just really curious between having a lot of new agents in the last 2 years who've not had to service a listing. And obviously we have the market who knows it's been really good in real estate, so they might be overly pricing their home. I mean, I can't tell you how many comps I've pulled where the listing asking price is like $100,000 over what the comps are supporting.
Where did you come up with that number?
I'm like, you cannot compare a ranch with no basement against 2 levels with a basement. Like, it's just not. So I where I'm going with this is, it's hard to know at the moment with our tech change what's a tech bug, or versus people not knowing how to correctly maybe update their listings with the new system, or putting them incorrectly, because we've had some issues with fields not populating. So I'm curious for the next 6 months, just within our agent community. I think I'm optimistic that things will sort themselves out fairly quickly. Our tech support has been very good about updating any known issues that are found. What I'm nervous about and I don't want to be overly dramatic about this, but is if we can't access the listing data correctly or pull comps, and then we have listings that should be showing up but aren't, and that is causing a higher days on market trend. And then someone who's not familiar with, oh, like we're going to have snowbirds coming back here soon from Florida who've not become familiar with our software. And I just feel like we're going to potentially have an inflated view of our data to where someone might be reporting and go like, oh, Indianapolis market's slowing down. And it's like, no, we've got multiple offer situations on the houses that do come up, or I don't know if I'm making sense. I just think that
Oh
there's
yeah, no,
kind of
that's
this.
perfect sense. I've been listening to it from a lot of agents, and it can be stressful. I had one, actually it was last week, and it was just land, and it was something one of my clients wanted to look at, and they called me and they're like, they said this is $4,000 an acre, and it was listed for 4,000, but it was 100 acres. And so he was like, that isn't right, is it? And I'm like, nope, that list price is definitely missing some zeros. We need to get those added. So I think you're right. I think there's going to be some misinformation out there, but hopefully they get it corrected quickly and we can get past this. But I know it's been a challenge for a lot of people.
Yeah, and I don't want to undermine the authority or the credibility of the data that we have access to. I think it's change, and it's for the better, because the tools that we have now are going to allow more agents to easily service their clients in a more professional capacity, because they have more tools that provide data in an easier way to have it be presented. And there's some tools that we have now that we didn't before this change that just really help give a much more comprehensive view to a property that ultimately helps us save time by not having to go dig as much through different layers of accessing information. And that ultimately helps us serve you better, because we can be putting our time into things that are helping us be better agents. So
Right.
well, I know we're coming up on the 30 minutes here. Is there anything that you want to leave people with, or one last time?
Just really, it's going to be a really good market, I think, for the next couple of years. And they're saying, like I said, interest rates are going to go down, and every forecast we see is saying, we'll see the fours again, and it'll be in the next 24 to 36 months. So fingers crossed it's sooner. But really, we're here to help, and we just really want to be an advocate for you. And again, if it's something that we can't do, I'm always going to tell you that we can't do it, but let us be a resource for you and let us help be a guide for you. Even if you just have questions and it's not buying for 1 to 2 to 3 years, we don't mind. We do also offer free credit repair. I know there's people that are credit challenged out there. So if you or anyone ever, needs help with your credit, we do that as a free service. No questions, no strings. Like, we will help you as a human being, because I know that can be a struggle sometimes, where somebody will call you, run your credit, and then never return your phone call. And we're not going to go down that road, and we will actually check in with you once a month. So if that's something that you or somebody needs help with too, we would be more than happy to help with that.
Love it. I can't implore that enough, guys. I feel like anybody who is trying to repair their credit or get into a position where they want to be able to own a home are just constantly victims of scams, or getting pulled along on something that actually doesn't really make a difference. Like, my encouragement is to always start with your loan officer, your go-to person that you trust, and let them refer you to a credit repair company if they can't help you directly, because they can coach you on your file and tell you specifically what you need to do to improve to get in that position. Whereas like that may not be the case with a different party or company, and what worked for your friend isn't necessarily what's going to be good advice for you. So thank you for your time, Angie.
Oh,
What's the
thank you
best way
again.
for people to get in touch with you?
My cell phone all the time, 317-797-0615, team@teamturley.com. Please read our Google reviews. We have a ton of them out there. We've got one we just closed we've been working with him for 10 years on his credit. I mean, So yeah, and again, do your research. That was another thing we should have said about your loan officer. Just make sure you're Googling them, because, you know, Google knows all things. All things.
Everything. So, all right, guys, thank you so much. Stay tuned. Make sure you subscribe to our channel or follow us on social media for further updates. And tell us in the comments, maybe if there's questions that you have, so that we can make sure that these interviews are valuable and helpful. Thanks.